All right. Hello, everybody. Welcome back to another episode of Palantir Weekly. We took a week off last week, so sorry for taking the week off, but we are back. Lots of Palantir news to discuss. With me, I have, of course, Matt Money. I've got Dom Rinaldi joining us back. I think he joined us back 3 weeks ago, so he's back on the show. And we got Chris Patel, who was also 3 weeks ago, and now he's back on the show. Got a lot to talk about. A lot has happened in the world of Palantir. Stock price jumped to $17.26. Pretty amazing week. I think right now it's hovering at $16.49, ending the week up from $15.40 last week. Lots of news to get into. Before we get into that, Matt, how was your week? What are you thinking about the overall markets? And then we'll get into Palantir.
Good. Portfolios at all-time highs, and just happy to be here with the 1996 Dream Team. Love everybody that's on this panel. So, but no, in terms of, everybody's portfolio is doing really well, but it just goes to show you, right? We're still about a little bit less than 10% off all-time highs. You're looking at the SPY. So that means that you're at all-time highs. That means I've been investing, right? I think a lot of people don't take that into consideration. I think that that's something to be said. Hey, how is Matt at all-time highs if the stock market's not at all-time highs? Well, Matt invests a shit ton of money. So you just have to keep that in mind. So anyway, I'm just really excited about that. Just looking at it, it's like I'm like 66% growth away from kind of like the next step that I want to hit in my portfolio. So in that respect, it's looking pretty good. I think after that, I'm going to do some serious rebalancing. But I think that'll be a couple years away, maybe 1 or 2 years away before we get to that point, unless I continue to add expansive amount of capital. I was surprised by the CPI result. I think hopefully everybody is a little bit surprised that dropping so quickly, but I think we'll get more into that a little bit later.
Okay. Dom, I know you've got have you trimmed any of your Nvidia? You're still letting it ride and letting it keep going.
Sorry, I was muting the chat so I could respond to people. Letting it ride, man. 454. I was shocked. Someone was asking like, what price? I'm like, I think it's like 440. I'm like, no, man, it's 455. I'm like, all right,
it's a 473 in the morning too.
Conviction's still there. Long thesis still there. So I can't time this stuff, man. Going like when it would hit 432 like a couple weeks ago, everyone's like, oh, I'm trimming. Everyone's trimming real quick. I'm like, it'll go down. It went to 370. I was like, it'll be back there eventually. I didn't think it was going to go back that fast, but that's exactly why I don't, mess with that stuff.
Yep, Dom, exactly. Why not trim just a little bit off the top and then buy some puts with it for the next 2 years?
Seriously need to have educate Dom on options.
Dom does nothing with calls and puts. He just buys. Yeah. He just lets it ride.
Yeah. Oh, wow. So I would love some education on all that because I'm at the point where all my positions are so big, it's so concentrated that I love some creative ways to.
You remember 2021 when your portfolio was like all-time highs? It was like, yeah, man, I'm gonna quit my job and become a fucking stock guy, bro. And then the market came and dude, with that stupid candle, and then the market came and just took all the fucking shit out of the sales out of everyone's wins, but the wind out of everyone's sails. So,
I really respect what you're saying here, Chris. But I've been listening to you. I'm not downing it, right? Mm-hmm. And I think a lot of people give people crap about these hedge funds, right? They're always like, oh, they're underperforming, and a lot of that has to do with portfolio drag, which is exactly what you're talking about, right? Buying puts to make sure that you're covered in case of a black swan event or a massive downturn or a correction in the market. And so I think I've never seen it from an in-depth perspective effectively done. And to me, it seems like very difficult. I understand the concept. Take 0.5% of your portfolio, put it into puts to be able to ride out sort of any real downside that shows up. But at the end of the day, it's like I just haven't gotten to a place where, one, I'm smart enough, or two, I know what the hell I'm doing to be able to make that effectively work. And every person that I know that has tried that method gives up, and then the black swan event happens, right? Where they're like, oh, I'm going to stop buying the puts now. And then it's like 6 months later. Anyway.
Well, that's the thing is, if you're going to do it, you would do it with the longest date possible to give you that optionality. The worst thing you could do is buy puts so short term that they always expire without having to worry about them, right? Now, this is where you'd have to be, I wouldn't say super smart about it, but you have to be, somewhat willing to take on a little bit of a risk. So as an example, right now, Okay. You could technically buy $400 put contracts on Nvidia, and it'll cost you $75 per contract. Okay. Now that sounds like holy shit, that's a lot of money to pay, but that covers you.
What expiry
Huh?
is that?
December of 2025.
Wow.
Right? I'm
That's not
talking about
bad.
this is the longest out that you can go.
$75 a share, not 75.
Yeah.
No, no, for the contract for 100 shares.
For the contract for 100
75
shares.
cents a share.
Yeah. No, not 75 cents, $75 per share.
Yeah. So
Oh wait, so there would be
$7,500 contract.
7,500.
Yeah, $7,500 contract.
Oh,
Now,
sorry.
that's rather expensive. I'll grant it. Like that seems kind of expensive. But if you've ridden this thing from 100 to way higher and you think it's got a lot of room to go, this is one of those things that's just an expense that you're going to have to pay as insurance to maintain your profit.
Wouldn't
the
I
profit
only
you would
need the
get.
insurance if I plan on selling in the short term? Like my time horizon, like I'm not pulling this money out for like 20 years.
Right, but that's what I mean. This covers you all the way to December of 2025 in case of any sort of black swan event. Because what happens is that options contract can spike up. If let's say Nvidia tomorrow goes to $300, that $75 put option just skyrockets to $150, which means now you could sell that put option to somebody else, take that capital, and then buy more shares of Nvidia, right? That's the key. Like right now, the valuations of Nvidia in terms of like fair market valuation has jumped so high. I mean,
my feelings are hurt.
Yeah.
Someone said, "Does Dom have Twitter?" Yeah, I have Twitter. I have 7,200 followers.
I'm gonna
more
put
than
Dom's
me.
Twitter in the chat.
I
right
just
now.
tweeted about my new Palantir article. Help me break my record. I'm at my record's 30,000 views. I'm at 13,000 on day one. So, and by the way, Joe Lonsdale liked my tweet.
Wow.
As well as the article. I screenshot and sent it to you guys.
Yeah,
I'm
you
a
and
big
Steven
fan-
both do really good
Yeah.
articles on Seeking Alpha. If you guys don't follow them, please be sure to do that.
I'm not a big fan of Joe Lonsdale, to be honest with you. The guy, he seems very like super arrogant. Like he never talks to anyone smaller. I mean, he retweeted.
He
you
is,
guys,
but I
which
think
good.
that's why he's
know.
him.
He seems
know?
like the type of guy that's like, I'm too above you to really respond to anything you say. You know, like he's involved with like all the stuff that he does, but he never like brings on the average Joe. I get it, but dude, your American
I don't
Optimist
know.
podcast.
So I can't comment. I don't know him personally, so I can't comment on that person.
I mean, he's a billionaire, so I mean, I get it. Like, bro, you're on another level of wealth. But here's the thing: if I ever became like a billionaire, I would say, you know what? I could always get another rich guy to come onto my podcast. I want to hear from like the little guy on the ground, because I think those are the people that would interest me in talking to. You know, rather than like right now, I could care less if Amit has 200 followers or 2,000 followers. If you're bringing up some valid points, I want to hear what you're saying, especially if you're coming from a point where you're not sitting on a golden throne, you know?
Yeah.
So the thing
I
with
don't mind-
American yeah, go ahead.
I was going to say, I don't mind helping a lot of people. I think to me, where I draw the line is one, if you're not following me, or two, the way you approach the question. So I think a lot of times it's like when some people ask questions, they're like, why would anybody invest in Palantir? It's like, well, I don't know if you're sincere. I don't know if you're trying to like put me in a box. I don't know if you're a bear. I don't know if you're a bull. If you're genuine, and I think this goes to anybody in the comment section here, the chat section, and I think this goes for just general life. If you want somebody to help you, give them a little bit of context, because it gives them a little bit more idea as to where you're coming from and gives them perspective and allows them to answer the question appropriately. If you're like, where do I put $1,000? It's going to be like, well, where do I even begin? And I'm probably not even going to tell you where to put the $1,000. I'm going to tell you, like, and ask you a question, like question back, like, where are you in your investment journey? Or what are your objectives? And then people just get frustrated. They throw their hands up and leave. But I think that just goes to show you, like, if you truly want to get the right answer, you have to ask the right question. And unfortunately, maybe it's getting too philosophical. Unfortunately, a lot of times people know enough to ask a question, but they don't know enough to ask the right question. And then it gets them frustrated because they're trying their best to get to a place where they can educate themselves, but they aren't asking the right questions. And so then when you ask them or point them in the right direction, they get all flustered because they're like, just tell me what stock I need to buy. It's like, it's not that easy, guy. So anyway.
the thing is, if you guys notice, like go to let me share this with you guys. So this is his American Optimist podcast. So he has got some big heavy hitters to show up on his podcast. I'm talking about like Mark Esper, who used to be Secretary of, I think, of Defense under Trump. 835 views, right? I mean, this is just a clip. Other ones where he's got what's his name? Kimball Musk. He's got so many like big guys because of his stature in terms of like where he is in terms of like hierarchy, I guess the public hierarchy, right? So he's really up there because he's a billionaire. He could probably, reach out into his network and get people like he got Balaji Srivasan, so he got like 24,000 views, right? Yet it's the small guy and the small creators like us who tend to get more consistent views over a long period of time. So his dream of becoming Lex Friedman, for some reason, he doesn't have the it factor that
that's his dream. He says that publicly.
I mean, he doesn't say publicly, but I'm sure that's what it is. If he's trying, because he's got the same format at this point,
All right, since we're on the topic of that, let's start our first topic for the day. Alex Karp did an interview with Joe Lonsdale, both Palantir co-founders. I don't know how many of you watched it. I got through the whole thing last night. Raw thoughts. Did you like the interview? This is the first time we've heard Karp talk in about 2 months, and we have earnings coming up probably in 4 weeks. Anything to take away, Chris?
Lonsdale bent over and took it to the ass from Alex Karp, pretty much. I mean, no. The reason why
he's not a reporter. He just let him.
No. The reason why I say that is because Alex Karp and him are the reason. He had a disagreement with Alex Karp, and he was pushed out of the company, from what I'm hearing.
Wait,
like,
what?
Did you guys know
break this down for me? I didn't know about this.
Yeah, he apparently left the company. Well, no one just leaves the company. Your ass was, out the door. So him and Karp had a disagreement on how to proceed forward. He, what's the name? Karp, I think, wanted to go more on the right route of being more with like the government side of things, whereas Lonsdale was more like, hey, we need to do more outreach to like business and monetize. So Lonsdale wanted to do a commercial offering and focus on more commercial, where I think Alex Karp was more like vision oriented in dealing with like governments and stuff like that. But there was a huge fallout. I mean, yeah, I'm sure publicly they'll say it was amicable and all the other stuff, but pretty much there was a huge disagreement, and Lonsdale ended up moving forward with his career, and Alex Karp remained as CEO, right? So to have Alex Karp on, it's pretty much, swallowing your pride. And
they seemed really friendly with each other. Like really, they seemed amicable in the first 10 minutes.
You can pretend that's how it works, right?
Okay. Matt, what were your thoughts on the interview? Did you watch the whole thing? And
unfortunately, no. I had a pretty packed week. And so normally I'll be able to skip away for 20-30 minutes to do some YouTubing during the day, but unfortunately I was leading a lot of workshops this week, so I did not have the ability. I was presenting for about 8 hours throughout the day, so unfortunately I couldn't sneak away.
Okay. Dom, did you catch it?
I didn't catch it this week. Definitely, I think a lot of people made videos about it, so I definitely want to see what you said about it and others and watch it. I covered in my article a lot around the Air Matrix partnership,
we'll get into that
Kerasoft, and really I think what's getting under talked about is FedStart.
Okay, so I'll give my thoughts on the Karp thing, and then we'll do the second topic. Yeah. I think the first 20 minutes were really boring. Lonsdale it seems like he was so intimidated by even cutting him off that like he just let him like completely ramble. And once we got past those 20 minutes, he started asking real questions, really about Ukraine, which is the stuff I cared about the most in terms of what's going on there. Nothing business oriented, more so about the vision. And Karp gave some nuggets around being in the room with Zelensky and some of the stuff he was saying to him, some of the stuff Zelensky really cared about, and just reasserting that their software is incredibly vital in that country. And that's the most I got from it. The rest of it was kind of just feel good. This is how we started Palantir stuff. Hopefully, the way he was talking going into Q4 earnings or Q2, which will likely be August 4th or 8th around that time, is going to be good. And we're going to talk about earnings later. But it seems like Karp was upbeat and talking about the same level of arrogance he always talks about in terms of how they get their clients. Harry says it was amicable with pockets of awkwardness. You could tell they were both being vigilant about digging up past gripes. Yeah,
I think that all great minds, and especially founders of companies. I mean, I'm sure you guys have tried to start businesses, and you guys know what it's like to part ways with people earlier than expected, and you think that you have a good vibe and chemistry, but I think this happens a lot, right? Look what happened with OpenAI, right? And Elon and him being pushed out of the company and his strain on relationship with, I don't know if it was Sergey or if it was Larry Page. And obviously now what's gone down with OpenAI now being more of a closed source and being more of Microsoft sort of company. And that was not the original intent, right? But I think that you also see that same with what happened in early stages of Tesla. That gets talked about a lot. But I think you have a lot of these disagreements, and at the end of the day, it's these bright minds, and luckily the company continued to survive over the past 20 years. And I'm really looking forward to listening to the interview, because it's not somebody I've really associated with in terms of the company and its success. I've always been really focusing on it from a Karp and Teal perspective. So it'll be kind of cool to see that other lens. And I'm curious if that kind of gets shown in the room or not.
Yeah. All right, let's get into the first big news of the week. Palantir partners with Kerasoft, or extends their partnership with Kerasoft, a government reseller of software, basically a middleman to get technical IT solutions into the government. Dom, any implications of this that we're missing? To my understanding, it's just another way for Palantir to have sales distribution into the government. Any more you can add to that?
Yeah, I think it's really the natural scale for Palantir getting in with distributors and partners that, companies that we're familiar with software company wise, like, Microsoft and Amazon and others do business with, right? So for instance, at my company, VMware, Kerasoft, we work very closely with them. They are a very, very well-known public sector distributor and partner, very well connected to government. If you look at the news article, it talked about how they'd resell through NASA and a couple other different government reseller contracts and entities.
What do you mean by well connected? Like they just have sales folks that know people in the government? Like why is Kerasoft the big guy?
They specialize and understand the compliances and the different things that they need to accomplish, whether it's FedRAMP, whether it's certain types of buying seasons and contracts and sectors, whether it's education, whether it's government, state and local government, or whatever it may be. And then really the value add is their ability to help organizations scale through leveraging them, right? So you look at other resellers, the whole point of having a channel is that sales channel to help you scale and get your product out there. I think it was maybe Amit just earlier said, or no, it was on your other video, Amit. I was watching just before this. You were talking to someone. You've been everywhere on YouTube, by the way, which mad props. You were telling some guy about how like no one really knows, the common person, individual doesn't know who Palantir is, right? And so you're starting to see that change though with partnerships with AWS. They just announced a new one for AWS for manufacturing about a month ago. You got Kerasoft now expanding to Apollo, which is going to help in software delivery. And then if they keep doing this, we still know they have partnerships with IBM and Deloitte and some of the other ones. Once they can get people trained up and certified on the platform, you'll start seeing that's a much more cost-effective way than paying a direct-to-sales motion where you're just paying a whole bunch of account executives because it can't scale fast enough, right? Does that make sense? So it's all about scale.
And this is particularly for Apollo, right? And so that's
this is the addition. So Apollo is now a part of the Kerasoft piece. But so Kerasoft hosted a webinar this week. I registered for it, didn't have time to get to it, so I'll watch the recording. But they were talking about this partnership in Apollo. So it's just good to see like all the things we were talking about 2 years ago about. I want to see them at AWS re:Invent. I want to see them at RSA and other conferences. Now we're starting to see them they start their own conferences as well. They actually just had announced a Foundry AIP con or AIP
demos.
Yeah, for Korea, was it, or Japan? I think
Japan. Yeah. They have one in Japan. Yeah.
These are all the things that we were saying as a community, and they're executing,
Chris, any thoughts on the Kerasoft partnership at all?
It's not what you know, it's who you know. Kerasoft knows all the right people in the right sections of the government that do the contracting work. So You need a go in between who's going to be able to provide that guarantee that the software is going to work, provide the services that make it work. And last but not least, have that insider connection that gets you through the door. So if that means Palantir's got to give up some margin to Kerasoft in order to get the deal done, by all means, it works. It's a business model that's proven. So a lot of SIs do the same thing. PwC, Accenture, they have prior existing relationships with everyone and their mother in terms of companies. And they'll literally provide the software from Palantir, provide some of their own staff to do the implementation work and the support work. And basically Palantir gets a nice steady revenue from it and not really have to do much. So if you're focused on trying to do hyper growth, you want SIs to get into the business and help you do it. You can't do it internally with your own dedicated sales force unless like your product is just so freaking good and the industry is clamoring for it. So
But
this
to your
just
point, Chris, and
Mhm.
I don't want to cut you off, but I'm going to just jump in
Yeah.
real quick. Is the product is that good, right?
Mhm.
But what the challenge is, if you want to get the word out, you have to spend so much money, right, for marketing and getting commercials and getting it out there in the community. Whereas if they can get through a more affordable route to market, they're not bleeding themselves dry on G&A and
Mhm.
headcount and everything. Because if I'm Alex, I want to keep the top talent engineers who make the product so good and pay them what they're worth and make sure to keep the people that really make the product amazing, and then I can figure out how to get the go to market eventually.
Yeah. I mean, that's a strategy that they go by, which is good. That's something that seems to work for them. Other companies, from what I know, they'll develop their own internal products. They'll do as much outreach as possible to secondary developers, right? Teach all they can to how to build stuff on top of their platform and then sell the platform out and then, just rake in the money. So, yeah, I mean, like I said, it's a business decision. I just think that this is one of those things that they should have done 5 years ago, but whatever.
So hard
I
on
really,
it. You're so
huh?
hard on it, Chris. You're
I'm
so
always hard on them. I mean, what am I going to do? Give excuses to everyone saying, hey, listen, you know what? I'm sorry for the last 21 years. You haven't been able to be gap profitable. Like, why? I'll tell you why. It's because you didn't take the routes that you needed to early in your existence to get your product to market as much as you want. You focused so much on product development that you didn't think about product sales as much. Own up to it, live up to it, and that's it. Move on. They had a product marketing strategy, which was we will find a good company, we will partner with them, we'll build this thing out, and then we'll have our partner sell the product to their industry, to the other people in their industry, a la Airbus. That worked in certain areas like Airbus. It didn't work for Credit Suisse. They created this fraud detection tool for road traders with Credit Suisse, where they had a joint venture that Palantir actually put personal dollars up for grabs, and that whole venture blew up and they didn't go anywhere. So, everyone has a different go-to-market strategy. Palantir's for now has not worked out as well as it has for other companies. That's all.
Yeah, and I think that that's just part of being on the frontier, right? I mean, you're always going to make poor business decisions. I'm sure that, or things that go bad, right? Now, I shouldn't say poor business decisions. That makes it seem like all the decisions are poor, but there will always be, when you do so many things that are unknown, things will fail, right?
Mhm.
But going back to specifically the Kerasoft deal, I think to me it's another foundational progression into the Apollo platform. If you asked me 6 months ago, really how well is Apollo doing, I probably couldn't be able to tell you. Now that we've started to see them show up at AIPCon and a few other instances now, you can really start to see the versatility of the product itself and how it's really truly being implemented. One, it's multi-cloud. You can go to multiple different devices. You can figure out what specific classification you want to provide each individual user. And I think it is just another feather in the cap of Palantir to not only just say to people, hey, we're not trying to just openly give away all your data, right? We're here to focus on your cybersecurity. We're here to focus on the multitudes of different privacy networks that you have within your organization and make sure that the data stays within the right hands and you have access to it. And I think it's not only just that, but it's a revolutionized way to deploy software, which I think to me has always been, how do I say this? I've never logged on to our Palantir instance on Google Chrome and the website that we had to log in for our instance and had it be down. It is always live. It is always running. It has never been to a point where it's just features just show up. I'll log in the next day, and it's not like I had to restart my computer. It's not like I had to have that little box in the corner saying we must shut down in 5 hours. It's I log on or I hit refresh and boom, the new feature is there. So I think that just is a testament to show all of that. And not only that, but I'm also applying to a new application within Palantir itself. I'm transitioning to a new piece of what I do at work. And with that comes more classification. And so with that, there was a whole new list of data that I had to get not only kind of opened up to me, but created as well for different things that we're trying to use the platform for. So it just goes to show you that they're not just going to be like, okay, willy-nilly, here you go. Here you have access to the application. You have access to all the data. They're like, who are you? And why are you trying to access this? And I think that it's important. I think it just goes into another piece of, I'm just talking broadly about Apollo, but I think it's something that this deal will begin to show up in kind of what you had said, Chris, and what you had said, Dom, which is it's a market demonstrator to show what products Palantir does have available and what can be used going forward. And it's going to be another piece where Palantir has another feather in their cap that they can sell forward.
Yeah, one thing before we move on, I think it's very interesting to see Palantir's go-to-market strategy is exactly what we've been saying for the last 1.5 to 2 years. If you think about it, when we first started talking about this, remember we were like, oh man, I wish they would partner with more SIs. They partnered with SIs. Hey, I think they should do more cons, like where they go and actually do physical presentations. They did it. I think we should get more people like their vendors, like who they work with, partners already, to show off their product, because it's not you saying your product is great. It's better if your partners say your product is great. They did that. I mean, everything that we talked about, and especially Coach
They listen to the podcast.
Them.
Karp listens every Friday.
Bro.
Nice job. Hey, Alex.
Yo, hold on. I can
Karp, I'm ready to come on board, baby. Bring me on.
Bro, out of the 216 people here, I'm going to make a bunch of people smile that are watching, probably in New York City. There's a ton of Palantir employees that never comment in the chat.
Yeah.
And they're here and they're watching. And I know this. And don't ask me how I know this, but I know this. They're watching. And
a lot of UDOC employees as
recommend.
well. Yeah, a lot of UDOC employees that watch.
A lot of UDOC employees as well. Correct.
Hey, keep up the great work, people. Keep up the great work.
Keep it going, man. And you know what? Let Alex Karp. No, I don't hate him. I just, I'm like,
you just want the CEO to resign. You just want him to not be the CEO anymore. That's all.
I mean, I would say, look, to me,
do you still
okay?
So
you should eat those words, Chris.
Before
6 months ago,
before we get to shares, they have some great comments from our viewership. Persian Prince made a comment. Palantir will still have to provide oversight and delivery insurance, even if Deloitte, Accenture, etc. are leading the implementation. Brilliant comment. Very true. When you have SIs, you always have to have that reassurance that the actual company who created the product will have your back. You will have options of direct support, because there can be conflict and issues in deals where if Palantir is not giving that support, then all of a sudden you're not getting that full white glove treatment and you're running into issues, and they're just saying, well, it's Palantir's fault, right? So great comment there. Another one that was really interesting was someone said, if we miss in earnings, we're going back down to 10. And then there was some debate back and forth. And then the other person said, Michael said, I care about forecasting increase in customer count. I totally agree. I care about the revenue obligations as well as the customer count. And I love the final comment. Palantir keeps expanding every single quarter in 100 different ways. Totally agree. Like, they are just killing it in different unique ways. Sorry.
Yeah, we'll talk about Q2 earnings expectations as well, because customer count versus revenue is important. But about 6 months ago, Chris, you basically said we got to get Karp out of here. We needed a better operator. Do you still feel the same, or do you think he's done enough to think no, he should continue to maintain the CEO?
No, I think I still agree. You should be moved out as CEO. He could be the chairman of the board, which I think he would serve as in a much better capacity, and let someone who's better at software sales to take on that role, right? I mean, it's hard. Like one of the criticisms with Palantir that I not just me, but some people have had even internally is that it's almost like a who's who club of people at the hierarchy level where the top is pretty much occupied by original people that have been there for a long time rather than people that are built on meritocracy, right? So meritocracy should be at the forefront of people moving into a position of higher damn, I hate my wife when she starts texting me in the middle. Hey, sweetie, we can talk about this later. um so the thing is, in terms of meritocracy, because of the way that their company is structured, a lot of the comments that I've seen, especially negative comments, is there's no upward mobility for people at the lower level. So the thing is, like, if you don't give them an opportunity to move up, and it's just literally like a boys club at the top of people that have been there for the last 10 years, you know, it's not a way that you want to do business. But Palantir is good. Palantir is making all the changes that they need in order to succeed. I'm sure that Alex Karp is actually listening to us. He's listening to everything that's happening here. But
He has
more
changed his
all,
demeanor. He is less
but
erratic when he's talking and stuff.
but I think it's more because he realizes that now as a public company, you cannot just do it my way or the highway anymore. You know, you are beholden to the shareholders at this point. Maybe not fully because you have your founder shares, but I'm sure that he doesn't like seeing his stock get fucking absolutely demolished in the market. So when the market votes saying, "Hey, your growth rate is slowing down because you're not taking the optimal steps in order to grow your business," you have to take that seriously. When you're a private company, you could just, hobble on. It's not an issue. Now you got to show GAAP profitability. You got to show growth. You got to show that you're taking on all the things that a traditional software company does in order to grow the business. So I think the market has actually taught him more than us. Like, I don't think he tunes into us and says, "You know what, Chris Patel's absolutely right. I need to split Gotham and Foundry."
I don't think so. I agree. I mean, he's bent the knee a little bit, but I wouldn't say he's on the ground, right? I wouldn't say the knee is on the ground because if he was truly that way, he would have had a much more, I guess, conclusive AI strategy rather than just being like, we're just going to take up as much market share as possible. We don't have a pricing strategy, right? That did not show up well.
Strategy. You guys may laugh at me, but I think it's brilliant.
I do too.
Does anyone want to debate that? Because
I don't want to debate it at all. Me and Amit talked about it very extensively. I think the best way, you're now a profitable company, right? The best way to get it into the hands of people is to provide it to them for free and provide that extra step. And then turn on the spigot once that they're using you and you have a 50-60% market share. That's the best way. And I think that, honestly, that's kind of what their go-to-market strategy has been. And
Matt, just not to interrupt you, but
no,
isn't that something that we've been goddamn saying on this pod for the last 2 years also? Start giving your shit away for free. Let people actually use it so that this way they can get experience with it. That's what I'm saying, but they're 2 years late.
No. Yes and no, Chris. You're talking about to the very small-minded consumer. Not small-minded, that's not the right word. You're talking about to the very individual consumer. I think where it differs between what Palantir is doing versus what Snowflake is doing is that where a lot of things lies, you need a massive problem to solve for Palantir to truly be organizing themselves with you and partnering with you. And I do anticipate that they provide this a lot more free. I mean, they've been doing it the last year in Ukraine. I'm sure they've done it before with the pandemic and the vaccine rollout. And it was only until the CDC started renewing contracts that they would start charging, right? But anyway, I think that that's been more of a freemium version than you anticipate been going on. And I think it's just because Palantir isn't 100%, just like I'm sure there's plenty of people that get free stuff at a lot of companies that isn't necessarily highlighted. I think it's just because there's so much focus on Palantir and their contracts, and there's such a retail investor niche that they think that everything's public. It's like, well, why would they give everything for public, right? Anyway. I'm more optimistic, glass half full about the go-to-market strategy than probably a lot of people are.
Hey, I'm right there with you. I'm full glass, not half.
I'm waiting for a correction. So once the correction comes, I'll buy in again. Don't worry.
Can you get
I'm
Chris?
done with
Because people probably didn't hear you on Finance Junkies a couple days ago. When are you planning to get back into Palantir, if ever? What are your preconditions?
9, 10. When it drops back down to 9, 10, I'm a buyer again. I think the company's got long prospect to go, but they're overvalued right now based on the macro, because we're in such a high macro environment that they have to perform absolutely perfectly to justify their overvaluation, because right now they're worth $35 billion with revenue that's slowing down significantly. So if they don't live up to their revenues that they've been promising, the stock price will get shellacked, and it'll just be an opportunity to buy shares at a lower price. So
Read
Are
my
you
article,
saying-
Chris. Read my article about value.
I haven't read it yet. I have to read it. I have to read it.
Dom, what's your counter on the valuation point?
Yeah. So high price to sales. What does that tell you? It tells you sentiment. It tells you the belief in a company, right? So mix that with RSI and a couple other indicators. It tells you there's a full belief of what's possible, right? What I'm looking at with the company is what kind of problems are they solving? Are they solving the hardest problems that are out there in the world that no one else can solve? Check. Are they retaining? And I'm actually going to write a very big article on this, on why I'm excited about their SBC. And you guys, I may get so much hate right now. You probably defollow me on Twitter. I am so excited about their SBC being still high, because what is it doing? It's keeping their top talent there, especially as the price is going up higher in the stock. They have to make sure their top engineers get paid. So Microsoft, Google, Facebook, all these people who have billions of dollars to throw at people, don't get them to leave, because they have a product that no one else has. They're solving problems that no one has. So the impact keeps scaling and scaling and scaling. You look at what they're doing with Air Matrix. You look at what they're doing with Concordance Healthcare. They are now in 10% of all hospitals in North America. Let that sink in. We're talking about a conversation we had 2-3 years ago. We're talking about they need scale, they need to get into industries. 10% of all medical beds are managed within Palantir because of their HCA deal. So, like, I want them to keep the top talent, execute on the vision. To one of the people's point in there, I want to see continued customer growth, and I want to make sure to see more contribution margin continuing to grow. If you look at their revenue obligations in the 10K, they did have less revenue obligations. They have 936 million in the article. Once again, selfless plug. It's opposed to 1.2 billion, but they're actually going to recognize 57% of that within this year, opposed to where they were only recognizing like 40% previously. So we're starting to see the revenue recognition actually going to be applied in the earnings, which is really good, because that means projects are completing, value is being realized. If I had to sum up Palantir in like 2 words of what I want to make sure is always happening, it's value realization. Best company that I've seen in software in the world around value realization.
Yeah, and I don't think people. So before Chris gets, because I know Chris is ready to attack.
Yeah, I know he's ready.
She's like, you didn't say shit about the valuation. You're talking about all this beautiful philosophy about Palantir. I'm ready to go to numbers.
So you had this great gross profit margin hovering between 78 to 82%. That has yet to waver, right? And I think now we're getting to the place where we just hit net profitability from a GAAP perspective. If you continue to add to the revenue, yes, there's going to be increased SG&A costs. There's going to be continued increases overall, but I don't think that will grow faster than the revenue will grow. I think that'll grow at a much slower pace. And I think there's been evidence of that when you compare how much the cost of infrastructure and cost of SG&A has gone up for Snowflake versus it has for Palantir for the same kind of percentage growth rate. So I think what you're going to see is exactly what you said, Dom. Say we go up another $1 billion in earnings, it's probably going to equate to another $500 million. Sorry. Say we go up $1 billion in revenue, it's probably going to end up equating to another $500 million, 600 million in net earnings, and it's only going to get exponentially greater from there, right? I think
it's exponential because of the value realization as customers come online. Keep in mind, you always got to remember the business model: acquire, expand, scale. It's the scale part is when you see the cha-ching. And so you're now starting to see that with customers, and that's why you're seeing their revenue obligations. So to Chris's point on valuation, yeah, they're trading at a forward PE now of 78 and a price to sales of like 18. But can they consistently grow at 15 to 20% for the next 10 years? Most definitely, guaranteed. What companies other than the big Magnificent Seven and others can bet on that and have the financial health that Palantir has to ensure that happens? There's not many. And that goes back to the problems they're solving. That's why I care about like the case studies and the proven value realization, the 28% time savings on every patient per bed in their most recent healthcare study. That's how you get a CEO to stay with you for the next 5 to 10 years.
Yep.
Okay. Chris, is it still overvalued after you hearing all that?
I mean,
It's only overvalued if you're trading now. Do you want your money now, or can you hold this stock for 10 years?
No, I think it's more so a question of, is buying at 16 decent if you could buy it at 9? That's the question to Chris. Is it still going back to 9 after you hear everything?
Not considering that there's so many other opportunities in the market that are way better in terms of total return. So no, I don't think Palantir is the greatest investment at
But
this
total
time.
return in what time horizon?
Yeah, that's what I was just about.
Even I would say probably like 5
10
years.
years. Who's better? Who's a better return value from this point on? 10 years. Give me a stock that returns better.
Snowflake, easily. I mean, y'all wanted an answer. I gave you it.
But going to the specific point about Dom, about like the scale model and solving the hardest problems in the world, do you still think, Chris, that plays no weight in terms of numbers right now at all?
I mean, all that stuff is semantics. I'll wait until the numbers come out. I mean, you got a guy who's saying we'll grow 30% year over year for the next 5 years. Okay. Was your last quarter growth rate 17? Half of that? The year quarter before that, 18? Even lower? You know what I mean? So if you can't live up to your own numbers, Palantir, come on, brah. Come on. Not to mention, you got a lot of macro headwinds coming your way in the next couple of years. SaaS spending isn't exactly like on the high line of where people want to be right now, and you can see that.
I don't want to attack you too hard, Chris, but what is Snowflake anticipating their 2023 revenue growth will be?
45%.
I thought that they were going to remain flat for the remaining 2 quarters. I thought that's what they were predicting
for this for 2022.
They're growing, and they're growing at 45% last quarter. So
it's just that they traded at 24 times price of sales. So I think that's the real
right. And but that's what I'm trying to say. That right now they have still a higher percentage growth rate.
So basically, the thing is, you believe that they can continue that growth rate consistently more than what Palantir can grow, and with better earnings.
Yeah, I think there's some hidden jewels among Palantir. I mean, among Snowflake that not too many people are valuing right now. Their Snowpark product just came out, which has been a major hit from everyone that I've been speaking to. They also have a lot of investments in their VC fund with double-digit growth and actually some of them are triple-digit growth because they specifically focus on AI-related software offerings. So I think SoFi. I mean, I think Snowflake is going to do well. Sorry,
this is where
podcast confused. Yeah,
this is where I think Chris is right about the numbers, just the bare bones. But this is where I think it's not the time to think about the numbers. I think it's time to really think qualitatively. The stuff Dom is saying about 10% of hospital beds in America. That's a big deal to me. And then if you go deep into the healthcare sector, yes, I know we're kind of speaking abstractly about could they control this $4 trillion healthcare market, but that's where I want to be thinking at this point. Not saying that should be the only decision-making criteria, but that's important to me right now versus just the numbers. Because if we're right on even a couple of those industries expanding massively, customer count goes up the wazoo, and then this becomes that situation where forget 16, forget 17, like those days are behind us. We're not going back to 9 or 10 anymore. But if the growth sucks Q2, we're back there. And so it's really black and white.
Guy Austin knows the company really well.
Yeah, Austin's great.
Mad shout out. He said Palantir's growth is nonlinear due to their go-to-market strategy. First phase has negative contribution margin, correct, and then huge profits in the scale phase. Prolonged opportunity to acquire shares for savvy investors, correct. If we were bolder in our investments when this thing was at 6 and 7, which we were all buying. Well, we weren't like loading every single thing in the truck because we were thinking, it could go to 4 or 5.
Yep. All of us.
But the real reality is at 6 or 7, even if it went to 4 or 5, you were getting in. I mean, I don't even know if it gets back to 6 or 7 again for a very long time. unless something.
I don't think it'll ever get back. I don't think it gets back to 6 or 7 ever.
Yeah.
I do think that, however, a better pricing for their stock at the current rate of and the current macro is probably be 8, 9. That's fair value, and for me anyway. But then again, like my perspective is different than other people. But by the way, I am not buying Snowflake right now either. I think fair market for Snowflake is probably like 130 to 150. If it drops down to 130, 150, I'm a Snowflake buyer. For sure I'm a buyer.
You're basically your strategy is definitely timing at the lowest price possible, like timing the market.
Absolutely. And at the same time,
so highly involved in technical analysis.
But also there's something to say about missing opportunities and other things. Like I'm happy for everyone who held SoFi. I mean, I keep getting fucking I gotta calm down.
Kick him off the podcast.
I totally like the fact that people are making money right now with Palantir, riding from $9 all the way to 16. I rode that with you guys. I sold out at like 15.45, right? So the thing is, though, what did I do with that money? I deployed it in other places where I thought was a much higher return, which actually has panned out for me. Not everyone is, willing or capable of doing that, nor do they want to take that risk. But I saw an opportunity and I took it. Right now, your guys' investing philosophy is I am going to buy a company. I'm going to hold it for a long period of time, and eventually it's going to play out my thesis. Right now, my thing is I'm in the same boat as you guys to a certain degree, but I'm also willing to jump out of the company that I think is a lot more speculative and jump into the company that I know can perform. And all they're doing is having to revert back to their mean again. And I'm going to be making a disproportionate amount of money in the meantime.
Momentum investing, which there's a lot of professional investors who have made huge names for themselves in doing this. So it's not to say that cannot work for people by far. Yeah. I don't have the time or the research enough to follow enough companies. Like I'm proud of myself. I went from 100 companies down to 40. I'm gonna get that bad boy down to like 15.
What are your top 5, Dom, right now?
Yeah, top 5. So my top 2 are 50%, over 50% of my portfolio now.
Oh wow.
So Nvidia is over 35%. Palantir is 18%. And then it goes to Tesla and Mercado Libre keep switching. So it's Mercado Libre, Tesla, back and forth. And then 5th one is, I believe, ABCL, which all the Accelero fans will be really excited about.
Dom, you and I are actually, you need to come on Finance Junkies and give us the Mercado Libre bull case, because we've been thinking about that. Carlos said that their net income increased 300% year over year. And then I saw a $50 billion market cap, Amazon of Latin America. I was like, all right, we need a deep dive on this. So
yeah,
we got to get you on.
And another one that I'm sure Chris might actually be playing this one, as if you're playing momentum, is C Limited right now is trading at absolutely wonderful prices for a very visionary CEO and a mass market. When you look at emerging markets, the two, because India, there's just not a lot of stocks you can invest in India right now.
C Limited is like a shipping company?
No,
I got burned by C Limited last year. I bought at a higher multiple than I should have, but it's not because what C did. It's because of some of the regulatory changes that India made, where they actually get a significant portion of their revenue from gaming. And India just came and said, you know what, we're not going to allow this, blah, blah, blah. So this is the kind of stuff that happens with companies sometimes, where
it's a great
you think everything that
markets, it's hard to keep track. Like government things can really throw up the thesis really quick.
Yeah. So, I mean, I have to do more research on it, but I think Mercado Libre is probably the better play compared to C Limited, because of just how broad Mercado Libre is and the total addressable market that's available to Mercado Libre. By the way, Mercado Libre partnered with Facebook or Meta for actually utilizing WhatsApp to do transactions through. I don't know if you guys know that. Yeah. Mercado Libre is a very interesting company. They're very forward looking in the way that they're doing business, and Latin American growth is actually very interesting to look at. That's why you're seeing companies like Nubank really emerge. You're looking at Mercado Libre. So
chief strategist of Mercado Libre went to Nubank. He's on Twitter and he's a really good guy.
Yeah. So the key to Latin America right now is Latin America is going through a technological renaissance led by Silicon Valley. So if you're looking at a lot of former Silicon Valley, they were trained, they're Stanford grads that have moved down into this region and said, look, what we have in the United States in terms of software and infrastructure, if we took that and put it into a fast growing market with a tech savvy population that's becoming more tech savvy, that means that we can have huge returns into the future, right? So that's where you have companies like Mercado Libre who are listed here in the US, providing services down south, down way south in South America, and are able to grow because they fundamentally have American business DNA, which is amazing.
Their founder story is amazing.
Yeah.
Highly encourage you guys. So there's plenty of podcasts to listen about how the founder got the funding to start the company, and they modeled it after PayPal and eBay. It's a really neat story.
Chris, let me ask you. Or go ahead. Last thing you were saying.
No, I was just gonna say American software and technology DNA is super valuable. These guys and the people and the things that they learn in Silicon Valley, and also the VC backing that Silicon Valley can have. I've seen it happen in India too, where these former Silicon Valley investors and also founders have been able to carve out niches in other markets around the world and capitalize using the same go-to-market strategies, using the same funding strategies, but tailoring it to the local population. So I think that's an area that's worth exploring in terms of like the next phase.
I want to go into the thesis on Melly so bad, but I'm not going to do it.
We'll have you on
Another
Finance
time.
Junkies. We'll have you on it.
Well, I do want to comment on one comment before you go to another topic. Bossman8 made a great point, because I know a lot of people keep asking me, like, why haven't I written a new article on Accelera or anything like that? He says, I work in biotech and certainly understand ABCL value proposition, but feels like it can be dormant for some time. It's a Peter Thiel backed 3 billion, 4%. He owns like 4% of the company, immunotherapy, antibody company for drug discovery. And you're exactly right. It's trading at dirt cheap prices right now. However, biotech is violent. It is volatile. It is nasty, because when something spikes up high, it's great. As soon as they lose the patent, which is not a case for them, it's not a patent. But let's say something, for instance, COVID, they had a lot of COVID spending for their drug. Now that people aren't buying that, all of a sudden, all the valuation, everything changed. And now they start trading for much higher and the revenues are gone. So I'm not adding a lot to my position because of the fact that I need to do my homework. I need to watch all of their CEO conversations or health conference. I need to know, is there something that's going to replace that revenue soon? Because if not, something that's at $6 or whatever it's trading at now can easily, with the sentiment in the market, go to like $3. And that's exactly what happened with Fulgent Genetics Biotech, which is a great company. Sorry to derail. I just wanted to throw that out.
That's good.
Now, like with biotech, had I known what I know now, I would have bought a biotech ETF and been done with it. And I would have DCA'd. This new DCA method, Chris, hopefully you'll approve of this, that I'm doing. I got it from my guy, Tom Nash, is just a weighted average, right? So basically, the way I'm buying my stocks now, my highest conviction stocks, I'm trying to get to only like 10, 15 positions. And so if it's within 10% of the all-time high, I will purchase a $300 or $100, depending on which one how much I like the stock, costs for that week, right? I'll pay that for that week. If it's 20% off the all-time high, I'll pay double that. So I'll pay $600. If it's triple that, if it's 30% off, then I'll go even higher. And so what you're doing is, if you've picked the right companies, that's the key part. If you've picked the right companies, you're creating a lower cost basis over time, and you're creating a weighted average of cost of capital down. Does that make sense?
Yeah.
Yep. I've actually bought a good amount of Accelera over the last year and a half, 2 years. It's in a segregated account. I have forgotten the password. I've forgotten the username. And I'm not going to open that up. It's like a treasure chest that I'm going to leave closed for the next 10 years. And that's it. I'm not going to touch it. I'm not going to do anything with it. I know in the back of my brain that I have some Accelera shares, but I'm not going to look at it. The reason why I say that is because this company is very well run. Insiders are buying like crazy. Their software and their hardware platform that's integrated with pharmaceuticals is great. They still have reoccurring revenue coming in from partnerships with software. So they don't have their own internal drugs that they're actually having to market and they license. They have about $1 billion, I think almost $1 billion in cash on the balance sheet. They are going to be a 20xer for me, but I know myself, and I'm not going to try to risk it. So I
Because like I
took
know I can't be long, so I gotta
I
I gotta
I
keep
took
this.
I took some money, I put it into an account, I bought Accelera, and then I fucking just threw that shit into the ocean. And I'm not going to look at it for the next 5, 10, 20 years because I think Accelera is going to be a 20x company. I just can't tell you when because that's not how biotech works. Biotech is this magical thing that's like a lottery almost, right? But this is an educated guess in a company that I think will eventually do 20x. And if it doesn't do 20x, it's not any money that's really material to. I mean, it is material
What's
amount
the
of money, but
percentage of
it's
your
not material to
portfolio
me.
in Accelera?
I
4%,
have no
2%,
clue. I have no
1%?
clue because my portfolio is so high up right now. I can't even calculate. All I know is I'm not up on Accelera at all. I'm actually down on Accelera. But my goal at Accelera is not a 2x or 3x. It's 20x. But that's way into the future. So.
But I want to tie that back to kind of what you were talking about earlier, Chris, which is like having these medium term or shorter term run ups where you sell and then you have the momentum trades into the next thing, right? And what I want to highlight is Chris isn't wrong or Dom and I aren't wrong, right? I think it's just based off perspective and it's based off of how you're personally able to invest and how much time and stuff you're able to dedicate. But going back to kind of like what Chris is saying about Accelera, that's how I look at Palantir. So to me, it's like I'm not going to touch it. I'm not going to trade it. I'm not going to think about, when I'm going to sell in the short term because I am firmly believing that from a $35 billion market cap that we're going to be a 10x from here, right? I've already kind of gotten to a decent extent growth on the position that I already have, but I think it's a 10x. And to be honest, my upside case, I think it could be a 30x from where it is today. I think it could eventually get to $1 trillion company in 20 years or so. So I think 15 to 20 years or so. I think that that's very possible. So for me to sell it, knowing that I would then take that money and then eventually in say 6 months have another buying opportunity and I might miss out on that, just like I've missed out on the opportunity in Tesla, just like I missed out on the opportunity in Facebook 6 months ago or a year ago, right? Those are things where I look at the price and I'm like, oh man, Tesla's down to under $110 a share. And I'm like, I need to buy some. And then I have to go to a meeting and then I come back and I forget about it for 3 days. And I look back and it's already $135. And I'm like, well, maybe it'll pull back next week. And it never does. Right. And that's the sort of thing where you have to really be on top of your game, where if you have that active ability and timeliness like Chris to be a hawk and to swoop in whenever you see it, or you have that cash on hand, then there you go. But if you're like me, and unfortunately, like 10 hours of the day, you're distracted, especially during market hours, you're kind of screwed. And you don't have that quite ability to be able to be as much of a shark as you want to. And so I think it's not to say that Dom is right. It's not to say that I'm right. It's not to say that Chris is right. Amit's never right. That's why he asked Chris for everything. But it's a bad joke. But anyway,
no, it's an accurate joke.
but I think that you just have to recognize what is the trading style for you, and you could follow and believe in a lot what Chris says. But I think unfortunately a lot of people look at the way that Chris trades and thinks that they can be as agile as Chris can be. But in the reality, I don't think that they can be.
No, they can't because Chris doesn't sleep and he researches like crazy and like that's why he's able to get away with this shit. Most people cannot do that.
And Chris has a very high success rate because of that. If you think that you can come in and put in less hours than Chris does, which let me tell you, Chris puts in a lot of hours and dedication into his research, you're going to be sorely mistaken. And I think you're going to underperform the market. So I think that you have to recognize where and be realistic with yourself, where your best time is utilized, right?
Well, and to your point, Matt, really quick, and we move on, is I went, someone said, like, how did Dom have 100 positions? So my concentration, my top 15 picks were 80% of my portfolio. I was starting to disperse a little money here. I was, as a new investor and young investor, my first 2 years of individual investing 4 years ago, I was like, every new stock was going to be the next multi-bagger. You hear about it, you get excited, you start looking into it, you read and then I put a little bit here, put a little there. And for me, once again, to Matt's point, for me personally, I had to learn. I put my losses right up there. $25,000 lost in skills, $40,000 lost in Canopy Growth, $20,000 lost in WGS. And from that, I realized I just need to stay in my lane and know what I have the highest convictions of and narrow that down so I am diversified about 10 to 15 positions. And that works for me. I don't need to have all these multi-bagger returns, because if I can get a consistent, like I even asked myself 4 years ago, I said, why don't I just buy Apple, Microsoft, and Google and then a couple others like Palantir and stuff, and that's it. And had I done that, my returns would have been ridiculous. And the whole thing that stopped me from doing that was, well, Apple's a $1 trillion market cap. Google's approaching that. They can't do more than that so fast in a short amount of time frame. But I was proven wrong.
So one thing about when I try to look at a company where they're going to end up, this company Upsellera. All right, I'm not going to do a really big deep dive on Upsellera, okay? But this thing IPO'd, okay? It didn't SPAC. When you go through IPO processes, there's a lot of forensics that get done onto your company. They were disproportionately benefited by COVID because they had the only antibody that was approved for COVID when it first came out, which was bamlanivimab, and then they had a second one, bebtelovimab, whatever. But basically, they came out at the top of the market. Okay, who else came out the top of the market? If you guys remember, PayPal, right? Same thing with Peter Thiel. Peter Thiel is on the board. He said to Carl Hansen, who's the CEO, said, "Look, we are not going to get a better price than this at any point in the history of this company when we IPO. Right now, you need to IPO while there is market euphoria." So Carl Hansen, being a believer in Peter Thiel, said, "Let's do it." They IPO'd. They were trading huge above what they were making because this was a total speculative play. Now, what was good is that this unlocked a lot of capital for insiders, right? So the insiders been there. Now, insiders have been doing nothing but buying in the last 2 years, okay? Their software, their platform is really good, and their market cap is only $2 billion, okay? So when they IPO'd, they were IPOing almost at $20 billion, which is a 10x from here. So I just want to let you guys know that I cannot tell you when it goes back to trading at $60 again, but I'm telling you it's going to eventually happen again. There's already been a forensic deep dive in this company by multiple banks who were comfortable giving it a $60 valuation during COVID. I think eventually it gets back there. It's just, I can't tell you when that is. So I would say this is one of those companies. I looked into the technology. The technology is proven. Their counterparties are proven. Counterparties like Regeneron, Pfizer, Eli Lilly. This is not a company like DNA. Sorry to admit, I'm just going to be outright and say it, where you're partnering with companies that are kind of on the smaller side of things that haven't been exactly proven out to be successful. So if you look at the breadth of counterparties that DNA has, like the smaller bullshit companies that basically are throwing revenue back at them again, and this whole like thing that's happening, Upsellera is not that company. Upsellera has actually legitimate counterparties and partners that are significantly well recognized, which means that the technology, in my opinion, is proven. If it wasn't proven, we would have already seen that. And so after that, we're going to take some time and see where things go. So someone said, I actually 100% agree with Chris. The tech is proven. They were able to help Eli Lilly make a COVID antibody very quickly. They came out with an antibody that usually takes like 5 years to develop, and I think like 6 months. Okay. And then here's the part that really shocked the hell out of me too. They came up with when COVID happened and the antibodies, what happens is the antibodies eventually mutate, the variants came out. These guys were ready with a second anti-variant combatant within another 6 months that was proven and tested and then given out to the population. So they have a proven technology platform. But right now, the valuation is all being based on its total growth numbers, which absolutely you should not be valuing. You should be valuing it based on the technology that they have. And I think this company, like I said, is eventually a 20x, but actually maybe even a 200x, to be honest. But I can't tell you when that is. The amount of growth that this company could have in the future is just exponential. But I'll take my time and just say this is not a company that should be watched day to day for market movements. On the other hand, Palantir is $30 billion. For them to get to 300 billion, it's going to take some time. And I don't think it's going to happen overnight, which leads me to believe that I could be a little bit more like in and out of the market with Palantir. I think I can trade Palantir successfully and eke out a gain versus something like Epsilon, which I have no clue when they're going to blow up. And it's better just to hold them and let them ride. It's like buying Tesla, to be honest with you. It's like really like buying Tesla in 2012. If you had bought Tesla in 2012, you don't know where the exponential growth is, but eventually it's going to come, right? So there were tons of bulls, including my dad, who I you guys know the story. I had my dad sell because of a dumbass back then. But basically, once that S curve hit, that was it. Tesla went to the goddamn moon. So I think Epsilon is going to be the same exact thing.
Having said that, I have a question for you that we can end it off on. S&P 500 inclusion. Let's say it's Q4 2023 and you still haven't bought back into Palantir. Let's say they're at $20. Do you absolutely want to be in the stock before the S&P 500 inclusion catalyst, or you still will have the same conservative mindset if it's at $20 around there that time?
Here's a question.
I think that'll be major for the stock personally.
Just because you get S&P inclusion doesn't mean that you'll actually perform really, really well.
There's but the institutional ownership is going to go up a lot more than it's at 32%.
I'm sure it will, but I'm going to be a little bit more patient with it, if anything. And they're showing signs of growth, and I think the macro conditions are improving. I will buy back in, but I'll do it prudently by selling cash covered puts on Palantir, so that this way it's like a nice little income stream that I can use to just capitalize. And if I get what is that thing called? Assigned. I'm happy because I'll get it at a discount. So, yeah.
I do have a quick question, and I know, Amit, you're trying to wrap this up, so I appreciate.
Yeah, thanks, Scott, for the $2 super chat. I know we have Air Matrix and FedStar. We'll probably talk about that next week because we're just getting super late. So we'll definitely talk about that next week.
So I'm curious, Chris, where do you think in market cap do you think that Palantir would kind of top out?
300.
It doesn't really matter, right? It's just an exercise for the people watching. Where do you think?
Yeah, I think they're going to have the same growth trajectory as Salesforce. I think they had a product that hit a lot of customers and consumers, but they're going to materialize to be a nice 20% growth rate for the next 10 years. So if that's the case, then you should be valuing it similar to what Salesforce is like, and basically it'll be like a nice like diagonal run up like Salesforce. So if you see like a huge movement beyond that diagonal line, you should be a seller, and if it goes below that diagonal line, you should be a buyer, and and eke out a profit in between.
So 300 to 350 billion, do you think that that's reasonable?
I think 300. I think 300 in 10 years. I think by 2030 they could be easily a $300 billion company.
2033. Okay, so in 7 years or so. Okay, so the exercise for the room, I just want people to kind of hear this. Mm-hmm. Whether or not you think that you invest at, say, $16 today or $9, what you're kind of wanting, Chris. I think if your end goal, and, of course, we talked a little bit about your perspective and objectives, depending on who's listening, and this has to be right for you. If you think it's also going to get to $300 to $350 billion, and you have 0 shares of Palantir, who cares whether or not you buy at $9 or $16? If you honestly think yes, it will make a difference. Say you have $1,000 and you think it's going to go from $16 to $150, and you're going to basically get that 10x on your money from where you are today, then who cares if you buy it at 16? Because you're going to get that 10x, it's going to turn into $100,000, or you buy it at 9. So that 9 will then go to what? Basically like a 15x on your money instead. So it's going to go from a $10,000 position to a $150,000 position. So I think it just depends on where people are, right? I mean, if they have that conviction, right, wait. But I think that depending on what kind of investor they are, like, I don't want people to miss out on an opportunity where they could still 10x their money, right? Versus being greedy and waiting for a 15x.
Yeah, I mean, what's your goal? Like, that was the whole point of my comment earlier about Microsoft and everything else was my goal is just to have the house paid off, and then all my debt, I'm debt free, and my kids' college are taken care of, and then just live comfortably and be able to vacation a little more with the family and everything else. And so, and then what I consider retiring is being able to actually do this full time, writing, talking about the market, and not having to be out there hustling in the field. So for me, I'm not trying. I don't need a. I was so hyped about because I was a young investor. I was like, oh, I need to get a 20 bagger. I read Chris Mayer's 100 Bagger book, which is still a great book, by the way. But I was so ganged about, like, the market was going so crazy and you were just wanting to get your hands on everything. It's like, do I know that Microsoft will outbeat the market still for the next 10 years? Most likely, right? Is Apple going away? No. So, like things like that, like my greed got into, like, I had to find every pop. Like, that's why I said, like, I thought SEMA 4 was going to be like the biotech of, like, I mean, they had petabytes of data, AI, all that stuff. And that thing was so misled because a lot of it was leadership. It matters about the founder-led leader, and having a scientist as a CEO, no.
I think the thing that people should always, and this is the one thing that I'll say, if you missed out on Facebook, you need to kick yourself in the ass, because that was one of those opportunities that was like a once in a lifetime opportunity, man. Like, you had a company that's operational cash flow was fucking phenomenal. You had a CEO who was known to be this super like cost conscious person who was like a ruthless leader that would not be willing to cut headcount, and headcount was the reason why they were up. Like, we went into this so freaking deep on finance junkies, like even on our thing, that's like, I think sometimes those are moments where, and this is the thing that I have to give myself a little bit of credit. I'm not going to say I'm the best investor in the world, but I will say this: when I see market opportunities come up like this, I'm going to take them. I'm not going to say, well, you know what? I don't want to sell this one company that I think is one day going to be X, Y, and Z because of that. No, if you see a deal in the market, like crazy deal, you should be willing to goddamn sell everything and buy that and ride that higher. Saw that with SMCI, saw that with Meta. And I tried to tell these guys, and Amit will tell you, everything I possibly could, and made, literally, I spent days sometimes. And I actually even reached out to some people and saying, hey, you should be buying this. You should, not you should be, but I said, look at this. And I did that. And Matt, you remember, I reached out. Did I reach out to you about Meta?
No, but I was with
Yeah.
you on it. I just spent all
Yeah.
my damn money on Amazon and Google. That turned out okay, but not nearly as well as Meta did.
And
But
I
I
didn't invest in Meta. I just morally, for me, I just couldn't do it with the.
Yeah. But I do think,
I'm trying to remember. I mean, we talked about it, I think, on one podcast, but you never reached out to me. Maybe you reached out to me personally. I don't know. You and I talk a lot, so
yeah. I was the same thing with like SLG. When SLG was at $20, like, some people that I know that I like, that will understand fundamental analysis, I will send them a shit ton of stuff. Like, sometimes I'm pretty sure that people have muted my conversations with
Hey,
them.
what did I say to you about it, Chris, when I read SLG? What did I say?
I don't know what you said.
You probably I think I said, I was like, there has to be some poop somewhere, because this just doesn't make any sense.
Yeah. So that's what I'm saying, that this is like, when you get some high conviction, the first thing you want to do is reach out to your friends and tell them, and so that's what I did. But at the same time, it's like, it's something that you have to be willing to sacrifice some of your longer term expectation winners to go a little bit short term for a very short period of time. Not like you need to be in it forever, but there will be times where Mr. Market gets stupid and will then try to give you great deals. And you can't say, you know what, Mr. Market, I'm sorry, I don't want to take your deal because I believe this other company here is going to be much better in 10 years. That's where you have to be a prudent investor. Say, hey, listen, Mr. Market, you're willing to give me a huge discount? Okay, sorry, Mr. 10 years. You can wait another 8 years. I'm going to buy this up and then generate a shit ton of return and then go back into it and then plow my money back into my long-term thing again. And I know that sounds like counterproductive, but that's sometimes that's what you got to do, man.
All right.
Yeah.
So where's your hot date, Amit?
I'm not on a hot date. I don't know why you guys think I have a hot date. No. This is good. Obviously, we got a lot of updates from Dom and Chris. Everyone, let me put Dom's article in the chat for those that have not seen it yet. We got to break his record on views on this article.
That'd be cool. That'd be really cool.
Yeah.
Retweet the hell out of that thing.
Dom, how hard is it to write on Seeking Alpha?
It's not.
It's not. I've been
only
to write on Seeking Alpha.
I've only done 26 articles, but
Yeah.
For those who have time, man, you can make, like, Steven, the guy who you have on for SoFi. That dude's making bank. I mean, he just keeps pumping them out, like, and that's his side hustle. So
Bro, the thing is,
The
I hate writing. Like, I can't sit down and write. I don't have the attention. That's why I love talking and making video. I can talk and bang out a video.
You're so dynamic, Amit. Like, you're so engaging. Dude, I watch your channel all the time, and then if I miss something, like I'll go back and like watch. You know, like you were on, but now you're like on everybody else's podcast. Like, there was one I still got to go back and finish, but dude was like trying to ask you about your story and everything. And
that
then
was
you
Pedgy, right? He's the Tesla guy.
And you were just like, dude, you gave me the intro. It's good. We can talk. Like, you already hyped me up enough. Like, I was like, oh, he's cool cat now.
No, I just can't sit down and write, bro. Like, I try to write, and I'm like, I can't do it. So, Chris, I don't know about you if you have the patience to write articles.
No, I can write. I can write. The thing is, like, I have to try to distill information in a way that's easy to understand, but also somewhat nuanced so that people don't get lost in the material. I think sometimes if you try to make things too, like, that's why I like the podcast format, because I can talk to a person like I'm like talking to you guys. But if I start to like write, I can get a little bit.
I mean, I love doing this,
Yeah.
but it just I wasn't getting enough followers to make money. Like Seeking Alpha, you can make like $100-$120 an article.
YouTube's a different ball game because they have an algorithm. Seeking Alpha, everyone has their own different strengths to be able to see how they can monetize. But you know,
well, I hope Adea.io blows up and you are, crushing it and not even having to do anything but that.
Yeah, I hope I have Nvidia gains like you one day, because I know the number you're up.
If I would have followed Chris's, strategy on price of sales or valuation, I wouldn't have these gains.
That's true. Yeah, it works true. Like, by the way, I mean, if you sold Nvidia at 270, like, you wouldn't have it, and that's where Chris is wrong. But for the majority of stocks, Chris is right, because it's like Meta at 88.
Now here's the thing.
That anomaly.
Now here's the thing. What did I do instead of buying Nvidia? By the way. What did I do instead of buying Nvidia, even though I was bullish on the sector? What did I do? I found a hidden gem that I know partners with Nvidia that was trading at a PE of 6. Okay,
when 70% year over year. Yeah.
I gave these guys all my data on that. SMCI. Guess
SMCI was trading at a PE of 6 at $70, 70% year over year. Chris is sending all this shit in the WhatsApp, and I'm like, whatever, Chris. And
how come I'm not part of WhatsApp? I'm not even in the WhatsApp group.
We gotta get you in there.
This is the first I'm hearing about SMCI, Chris.
The first time most people are hearing about it. No one knew super micro compute, whatever the fuck this. Like, no one knew.
I tried to. We did an episode on on Finance Junkies where I brought up SMCI. Yeah. The thing is, though, like I said, sometimes there are hidden gems out there that a lot of people are focusing on the big guy. Everyone was focusing on the Nvidia and completely ignoring SMCI, who's like a major partner that's literally trading at a PE of 6. So the safer option to me was SMCI compared to Nvidia, but who knows?
And that's what I mean, man. It's like once you find something, if you know it's going to hit and it's going to be like, instead of being like Chris brings up a lot of great companies. It does a lot of great research, but it's like, it takes a lot of time. And even if you literally shout on the top of the mountaintop, people aren't going to listen to you. So it's like, you're kind of on your own. So that just goes to show you, it's like Chris has found his niche, and you have to find what works for you. You have to find your niche.
I always love that Matt brings that back. Just find out what works for you and know yourself, and you'll be successful.
Here's a question to you guys. What's the biggest lesson that you've learned in the 2023 market?
I don't think I've yet to learn it.
Listen to, or just like when someone sends you some research, anyone, it doesn't matter if it's you or a random DM on Twitter, look at it.
Trust your gut and your research and all the hard work you've done, because if you have done your diligence and your conviction is high and you're willing to lose it, I should have had way more into Palantir at 6 and 7.
Same.
Because everything, I keep going back to that quote that Karp said. We are building technology that 5 years from now, people right now don't know they will need, and we're 3 years in, and you're seeing it all come to fruition.
That's why AIP was launched in 2 weeks. That's literally, or 2 months or whatever, right? It was for that reason.
Yeah. So that's, trust your gut. Do the homework, but then trust it.
I agree with that. I think the reason why I said I don't know if I've learned it yet is because I feel like I thought, just you said it at the top of the stream, I thought that when we hit 432 on the SPY that we were going to have a big turnover. And here we are at 445, 450 on the SPY, within 10% of all-time highs on the S&P. And I was expecting us to be pulling back 10% a couple of months ago. So
Bro, we're 10% away from 2022 highs. That's insane.
2021 highs, yeah. Well,
Bro,
I guess, yeah, January
did any
3rd,
of us
2022.
think that would happen, bro? We're
I did
10%
not.
away from
And so
478.
that's the thing, is just like, it makes me think, it's like I should have, just like I knew I wanted to consolidate some of these dividend plays that I have in my portfolio. I'm sitting on a lot of Johnson & Johnson. I'm sitting on a lot of Pepsi, and they've all run up really well. So I'm not saying that they're bad, that I have held them to an extent, but I would have had way more capital appreciation if I had it in SPY. My biggest position in my portfolio, with probably over a quarter of my net worth, is in the SPY or SPY equivalents in my 401k. And I've been trying to continuously consolidate into the S&P 500. And I didn't do that with a few of these companies. And I'm sitting back wishing that I had. And so it just goes to show you, I mean, you have to literally, when the opportunity strikes, it's like Chris said, if you see something that's out of sorts and you know it's a company you want to get into it. But make sure also that you're not catching a falling knife, because I think sometimes people will be like, oh, well, the company's had a few bad quarters, and the management's kind of toxic, and the stock's pulled back 40%, but it'll turn around. And next thing you know, you're buying an Intel or an AT&T, and who knows, the verdict might be out on Intel, it might turn around, but you don't know. But AT&T, I don't know. That's a pretty tough one. Management making poor decisions, and you're like, oh, but it's a great dividend, so I'm going to keep my money there. It's like, well, you have to kind of, you can't just be like, well, the dividend is good enough, right? Look at Walgreens, look at AT&T. Both of those companies are really struggling right now. So anyway, they might have a turnaround story, but you might destroy some capital in the meantime. And that's just something I've learned throughout the last 10 years. I've had this story on my channel, and then I'll hand it back to you guys, because I know Amit has to go on his date, even though he's denying it. But I started off as a dividend investor because I work in oil and gas. And 6 months to a year, me joining the oil and gas industry, everyone's fat, dumb, and happy. Oil's $100 a barrel. And, we were sanctioning projects left and right, making billions upon billions of dollars a year. Next thing you know, oil price goes to $28 and everyone's getting their heads chopped off at work and getting laid off. And 30% layoff happens in front of your eyes when you're 22. You're like, oh shit, you get a little scared. So I started investing only in dividend companies, right? Anything that paid a dividend. So I didn't care what the capital appreciation was. I was like, I'm not going to be caught with my pants down. I need capital coming there, dividends coming in. I need income. And that truly was a detriment to my portfolio, because had I just invested in the S&P 500, I'd probably have easily $400,000 more than I do today. Maybe even $500,000 or 600. I don't really know. But I stayed, and I was just like, okay, these oil companies, and the oil companies, most of them stayed flat, but they were paying a decent dividend. But I could have been getting years of 30% returns, or 20% returns in some years. And I was just sitting there being like, it's okay, I have my dividends coming in, because of the perspective I had of almost getting my head chopped off at work. So I think that you just need to recognize and kind of just like, you get smart enough when you get a little bit your feet wet in the market, but you're not smart enough to make the right informed decisions. And so continuously learn from other people, like everybody that's in here, because I recognize that I messed up. And, dividend investing could be great, but it depends on your circumstance. I missed out on, and recognize that I missed out on several $100,000 worth of capital appreciation. And maybe most people, they give up because they don't put enough due diligence into it. They get into penny stocks, they get one bad trade, and next thing you know, they're like, I'm out of the market forever, and they never invest. So continue, pursue, find the right thing that's right for you.
My last tip will just be this: know what you have the highest conviction in, and do that homework, and then figure out what that diversification is on how many stocks you want to hold, and then challenge yourself that, is something actually better than these top 10 or top 15 or top 25? Does it earn the right to be part of that portfolio? Because had I done that, a lot of these things that were speculative, that money would have been put towards Palantir, Nvidia, Tesla. So just, don't stress. You don't need to hit a home run every time. And Chris has talked about that.
Yeah. I would say profitable companies who've lost their way can find their way again. That's my biggest advice to people, because especially if the entire industry sells off and it's not the fault of that one company, that means that the chances that the entire industry recovers is much higher than anything else. So as an example, when you saw big tech all get shellacked 50%, where Google was down, 40%, Amazon was down, I think 35-40%, Meta was down 70%, Tesla was down 68%. Like, it's crazy because these companies are profitable companies generating cash flow. All they have to do is turn a few knobs in their operating structure, and boom, their profitability is back to where it's supposed to be. So if you see valuations dip too high dip too low in a company that is essentially profitable, and the only difference between them getting back to their all-time highs and being like in that position for the next 5 years is some structural changes with the company and an improving macroeconomic condition, those are the areas that you want to be in. So right now, a lot of my portfolio is focused on companies that are specifically being targeted as this is never going to recover. This will never go back to being normal again. What do you mean? No one uses Facebook anymore. Everyone's going to be on TikTok.
That was a good
Really?
one right there. No one ever.
Yeah.
Yeah.
You know. Oh, that's what I'm saying. That this is what happens when when it's the darkest before dawn. That's when you typically want to invest. So that's what I did. I would wait until it's the darkest possible. I see people like Jim Cramer. Oh my God, no one uses Meta anymore, bro. They're generating fucking $20 billion in cash flow a quarter. Like, seriously, and you're gonna give it a $200 billion valuation? Come on, that's like a screaming buy at that point. So it's just, not to mention you got a leader like Zuck. Zuck will figure out how to make money. So that was the easiest call I ever made in my life. But I will say one thing to you guys. If I was a much younger Chris, I would not have bought Meta. And I'll tell you why. It's because I would have listened to these tools on CNBC. I would have listened to these tools on Bloomberg, who all come on there and say, oh my God, you know what? I'm going to tell you the complete fucking wrong thing. And because
the next
I come
AOL.
I come in my fancy suit, I know better than you and I know more than you. I know fucking for a fact CFAs were saying Meta was completely done. CFAs, chartered financial accountants, were getting shit wrong. So anytime I tune into CNBC, I watch them because I want to hear their takes, but I know some of them are just fucking retarded.
People always get shit on for investing in the future. I mean, it happened with Elon. It happened. I mean, anytime everyone thought that Satya Nadella was probably going to be crazy with the whole cloud thing until he started really killing it, right?
And LinkedIn, they paid $20 billion for LinkedIn. They're like, "What the fuck are you buying?" Now Amazon, LinkedIn makes $8 billion in revenue every year.
Yeah, Amazon too. Everyone was giving them crap about AWS, but I agree with you, Chris. 2018, 2019 is when I really started buying into tech stocks. And had you asked me in 2013, 2014, 2015, Matt, you should buy Google here, if the same opportunity would have came up that Meta did, like that just showed up, I would have been like, you're an idiot. I would never buy a tech company. Why would I do that? They're overpriced. It doesn't make sense. It's, but here I am, and I've come full circle to recognize it's like, shit, these things are true conglomerates of great technological businesses. And I never really thought about it. It didn't click for me until I really started diving deeper into the numbers. I was smart enough to know what I was somewhat doing, but not smart enough to really know. And I think when you get smart enough and more educated and experienced, you realize the less you know about the market, and the more the market is just as fluid as what you can ever imagine. You just can't quantify it. You're always
one industry I'll never touch in my life ever again. Fucking oil and natural gas. Never touch that shit with a 10-foot pole. Why? Because oil and natural gas is one of those things that, oh my God, oil is at $100. Just like you said, Matt, everything is great. And then shit just collapses, demand drops off, the thing goes back to 50. And now all of a sudden you have to like eat that loss, and that company ends up going down 70-80%, and then it's like, what the hell is going on? So I mean, I hate oil and natural
commodities.
Gas
Commodities are tough, man. When everything was going on with Ukraine, Goldman Sachs was coming out. Oil's going to 200. People were saying it's going to 250. Yep. I was just sitting there laughing. I was like, these motherfuckers don't know shit. And I sold out. I sold out a lot of my energy positions. I still hold Shell, but I sold out and trimmed a lot of my energy positions that I was holding from the pandemic lows to there. It's a mid-July of 2022. And I was like, I have a feeling that this is not going to end well. And of course,
for people that think that, oh, Chris is always right. I was holding oil and natural gas companies in 2014, 15, and 16 just killing it until that one bear market came and took my entire portfolio with it. Because that's what happens. You think you're smart, but then the industry that you're in, it could be in a tough time and take you apart, man. So I still remember all the
for 30 minutes past his date time. I don't know if we want
Yep.
No, it's okay. I'm just a little tired today. That's all. All right. That's it. This was a good one. Thank you all for being here. We'll be back next week for more updates on Palantir, probably 2 or 3 weeks away from earnings. So we're getting there. And
It'll be a big
we'll see
one.
what's in store.
Great to see you all, man.
Thank you, everybody.
Later, guys.
Have a good week.
Bye.
Bye.